Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, January the 31st, FOMC day. We're going to get the release of the FOMC decision on interest rate increase. It's expected to be unchanged. But my name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some of these different strategies so that you can implement them into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. I did mention here in the United States, we at 2 o'clock Eastern get the FOMC statement and the Fed funds rate decision. It's expected to be remaining at 1.5%, so they're not expected to move. All right, on to the other economic data across the pond. We got German retail sales came in at negative 1.9%, expected to be a negative 0.3%, and they revised last month's number down from 2.3 to 1.9. So a big pullback in retail sales in Germany. We got French CPI, which is the consumer price index, came in at negative 1, expected to be negative 3. Remember, the flash estimates are the ones that are the most important, and we got one out of Spain. Spanish flash PM or CPI, consumer price index, came in at 0.5%, expected to be 0.9, and revised last month's number down from 1.2 to 1.1. Then we got the European CPI flash estimate year over year came in line with expectations at 1.3, and the core consumer price index flash estimate year over year came in at 1%. Here in the United States, we got the ADP non-farm payroll. Remember, this isn't the really major one to look at. It's the one that comes out on Friday. It's first Friday of the month. ADP has a tendency to give a decent indication, but it's been way off lately. Came in at 234,000, higher than the expected 186,000, and they revised last month's number down from 250,000 to 242,000. All right. Here in the United States, we also got Chicago PMI, which is Purchasing Manager Index, came in at 65.7, higher than the expected 64.2. Pending home sales in line with expectations at 0.5%. And then we got the crude oil inventories coming in at a build of 6.8 million barrels, supposed to be a build of 0.1 million barrels. That number is pretty big in a lot of reasons. We've been talking about inventories going down and moving that from one bucket to another. Something else to talk about. Right now, our daily production in oil is just slightly under that of Saudi Arabia. We're producing about 10 million barrels of oil a day. It is about 41,000 barrels shy of Saudi Arabia or something like that. It's really close. So that being said, we also have that being production at basically all-time highs. We also have the what was it that I was going to say? Production at all-time highs, and we also have the build here. 6.8 million barrels is a 10-month high, so that is pretty big news. They're also still refining and everything else, so we're still building on inventories of distillates and gasoline. Crude oil trying to hold on to some of the gains that it's had. You know, I would have expected this to be down a little bit more, but it is down on the day, but up from even where we saw these economic data points coming out. So the overall market kind of trying to shrug that off. I don't know that that'll last that long, but today it is holding tight. On to the other markets. We've got gold futures moving slightly higher today by about $4.50, $4.70. You know, gold futures have just holding on to anything. It's more of a fear thing. I think people are putting some money into the safe haven of gold because they're fearful of the highs that we're seeing. So that money being put to use there. Not so much in Bitcoin, which maybe one would expect. But a lot of people are talking if the stock market kind of tumbles, so is Bitcoin. It's not going to be like gold, where gold rallies when the equities fall out of bed. But yesterday, something to note, when we were talking in the daily market commentary, it was trying to stay high and then basically headed into the end of the day. You can see that the overall market just slumped down. Maybe late in the afternoon, we got a bit of a rally, but settled just above 10,000, that mark that I've been talking about. I think it settled around 10,110. But today, as you can see, heading into the open market, as soon as the market's open, the market in Bitcoin futures kind of fell over, down about 200 points. But the key thing to note here is it is below 10,000. So we tested that yesterday in the sell-off, and today we are down below that. So that's a big line in the sand for the bulls and the bears to fight over. Bulls want this, the people that love Bitcoin and the bulls want this to settle above 10,000. Any much below that, it could get a little dicey. Bonds kind of unchanged right now heading into the FOMC. With them being unchanged, I don't think we're going to really see a whole lot of movement out of the bonds. Maybe some of the statement that we get could give a little bit of further downside to bonds, but at this point I would see that we're in the right direction. Maybe not as steep as we've seen right away. Maybe I think we'll see a bit of a bounce and then go down and test those 145s. But I'm looking for a little bit of a bounce here. VIX coming off as the overall equities are moving higher. You can see it's still up in the 14 handle, not quite into the 15s as we saw yesterday, but still remaining quite high. Dow Jones is up 200 points, and well, actually, it's not quite at 200 points, about 130 some odd points it looks like now. But when the Dow was up 200 points, there was a article I read. Basically, the Dow's up 200 points was attributed to the Boeing earnings, and Boeing is up huge right now, but the Boeing's earnings accounted for 500 points of the 200 point up move in the Dow. So it's probably 400, let's call it 450 Boeing up points to allow the Dow to be up 135. Does that make sense? The Boeing is up so much that it's basically dragging the entire Dow up with it, despite the fact that a lot of the Dow stocks are down. Is what that really says, I guess. All right, so on to the NASDAQ. NASDAQ up 16 points after yesterday's big sell-off. We did get back above that 9-day moving average and settle above there. So I was looking for it to settle below that 9-day moving average to give us a little bit more room to the downside, come down and test the trend channel and maybe even get back in that trend channel. Today we're kind of holding tight. Everybody kind of shoring up positions is what it looks like heading into this FOMC meeting, and just a lot of light volume going on today. E-mini S&P is up 2.5 points, as you can see here, off the lows of the day. The high was created overnight, and then heading into the day session, overnight inventory was long, so we kind of sold off on that, which is what we generally expect. We didn't see that happen up here yesterday, but usually you would expect overnight inventory to kind of get flushed out, which I think happened today. But again, real light volume heading into this FOMC. All right, this is the Boeing trade. Sorry. Now I talked about this yesterday in the daily market commentary. This is a trade that I did for earnings. Sold some puts, said I was going to play it to the upside because of the durable goods numbers that we were getting. They were a lot better than expected. So I expected that Boeing was going to surprise to the upside. And I think they were supposed to release that they were going to get about $1.60, maybe $1.80 in for earnings. And they came out with like $4.80. So they crushed it. No trying to pound that down, despite the fact that they got better than expected earnings. That was a pretty big beat for all intents and purposes. But if we look at this on the daily chart, let me pull up a daily chart here. I ended up getting out of these. So I did the February weeklies that expire on Friday. Did the February weekly, sold the 320 puts in there for $1.86. Okay, got the directional move. We got volatility crush, everything going in my direction. You can see it's up $18 right now, 5%. That being said, all of those levers and pulleys allowing me to get out of those 3 20 puts for 9 cents in my margin account. Now in my IRA, I did a trade as well. And in my IRA, I went with those same short puts. So I went into the February weeklies and sold the 3 20 puts in there and bought the 2.95 puts. And I was able to collect $1.51. Did the IRA first and went into the margin account. So basically, I got filled at about the same price on my 320 puts that I got short, but I had to define that risk and had to pay 8 cents for them. Anyway, so I only got out of the 320 puts and bought those back for 9 cents. So a nice $1.50 winner in both of those in my IRA and in my margin account for that Boeing trade. So Boeing blasted off to the upside on good earnings. I guess I don't have any other charts up here. Let me pull up a chart then. Let's see. Boeing was one that I wanted to talk about. WYNN was the other one. I don't know where my WYNN went. But yesterday we talked about this. I put this trade on early in the morning. The market started continuing to rally throughout the day. I almost covered this yesterday on this big rally, basically an engulfing candle to the upside. And if you guys remember in Boeing, I went in there and sold, in WYNN, I went in there because WYNN has had a lot of bad press. Steve WYNN, speaking of, with the Republican National Convention. He's the finance chair there, and sexual harassment stuff coming out about him caused this overall market to tank. Well, yesterday we got a bit of a dead cat bounce is what it's looking like today. But yesterday during the day, I went in there and sold the March 135 puts in there, and I was able to collect $1.60. Market rallied yesterday so much and started getting a little bit of volatility coming out of that. I was able to buy those back today for 98 cents. Now, I usually look for 50% of my max profit, right? You guys might be saying, well, why didn't you cover those at around 80 some cents, which would have been about 50% of max profit? The reason why is when you get that move in one day, and I got about a 40% decrease in the premiums in one day, I can't knock that. I can't mess around for another 10 cents to get to 50% of my max profit. You know, especially when we started coming back down. We rallied up in the morning or right off the bat, but the market started sloughing off, and that's when I decided to cover those. I was like, this isn't looking too good. I'm trying to squeeze, a couple of nickels out of this. It doesn't make it worth it, so I got out for that 98 cents. So a nice, 60 some odd cent profit in one day. I'll take that any day of the week. All right. So we got a lot of a lot of earnings coming out today. We've got AT&T coming out. We've got Facebook coming out. Probably play AT&T and Facebook to the upside. We also got Microsoft coming out. Microsoft's had a big move. I think they're going to probably beat on earnings, but this might be one of those ones where the people are expecting a little bit better from Microsoft than even what the earnings estimates are, which has a tendency when they don't really knock it out of the park, comes off. PayPal, I'm probably going to be playing the upside just because of cyber, the cyber buying for Christmas. I think that's going to really help them out. I think the online retailers did very well, and most of those transactions are through PayPal, so I'm going to probably pay that to the upside. One that I'm not going to be doing is everybody's heard of. This is one of those stocks, everybody's heard of it, Ferrari, but nobody trades the option, so I'm going to stay away from that one. And we also have MasterCard that I'll probably be playing to the upside as well, despite the parabolic move in there, and UPS has come off, but I'm going to probably play this to the upside as well. All right. I just think that a lot of these earnings that are coming out today are very related to cyber, being PayPal and UPS. Probably play that to the upside. Facebook always does well. eBay is also one that's coming out tonight after the close. So I got a lot of digging to do to figure out which ones I'm going to do it on. Probably pick like 3, maybe 4 of those and play those for tomorrow. All right? That's all I got for you guys today. If you can't take that, take it easy.